First here, ApeCoin DAO officially favor to remain within Ethereum ecosystem. ApeCoin's DAO published a proposal on May 2nd to debate the future of the asset's blockchain. ApeCoin holders will vote on whether to stay on Ethereum, transition to a layer 2 solution, or explore chain migration. The ApeCoin improvement proposal, AIP, titled AIP 41, Keep ApeCoin Within the Ethereum Ecosystem, was authored by BAYC 2491, known as ASEC. The proposal was inspired by a number of incidents, including the turbulent Other Deed mint and subsequent Yuga Labs reaction. The sale of land in the Other Deeds metaverse by Yuga Labs has caused a lot of scrutiny of the financial limitations of Ethereum's gas fee mechanisms. This has led to some members of the ApeCoin community voicing their concerns about ApeCoin's fixed supply contracts and scalability potential. The deflation of the gas wars and lack of financial inclusion or integrity were further compounded by Yuga Labs' tweet insisting that ApeCoin will need to migrate to its own chain to properly scale. They encouraged the DAO to start thinking in this direction. Despite the suggestion from Yuga Labs, AIP 41 passionately advocated against the migration from Ethereum, stating that such a decision is currently too complex and costly to make, and potentially could damage their deep-rooted presence on the network with the largest volume and cultural adoption of NFTs. They believe that, for the time being, ApeCoin should remain within the Ethereum ecosystem and not migrate elsewhere to an L1 chain or sidechain not secured by Ethereum. The proposal received 3.8 million votes in favor and 3.3 million votes against, which is a 53.59% split. This is not a definitive outcome, and new proposals can be submitted for further discussion within a 3-month grace period. What do you guys think? Do you think that it should migrate to a different chain here, or do you think it should be on one still secured by Ethereum? Let me know your thoughts, pros and cons on that. I'd love to get some further insight. Up next here, information. AML CFT steps are key to fighting international digital crime, the DOJ reports. The United States Department of Justice, or DOJ, has released a report on international law enforcement related to digital assets. This is the first of the approximately 12 reports mandated in President Joe Biden's March 9th executive order ensuring responsible development of digital assets. The report, titled How to Strengthen International Law Enforcement Cooperation for Detecting, Investigating, and Prosecuting Criminal Activity Related to Digital Assets, was written with the collaboration of the Departments of State, Treasury, and Homeland Security, as well as the Securities and Exchange Commission and Commodity Futures Trading Commission. The report noted that different countries have varying abilities to deal with criminal activities surrounding digital assets, such as money laundering, ransomware, cybercrime, fraud, theft, terrorist financing, and sanctions evasion. This is due to the unique law enforcement challenges associated with the nature of digital asset transactions, such as their anonymity and ability to cross borders instantaneously. Factors that hamper effective transnational crime fighting efforts include weak enforcement of anti-money laundering or combating the financing of terrorism, AML, CFT measures, limited legislative frameworks, and lack of expertise in the face of an evolving threat landscape. Information sharing is an important aspect of international law enforcement efforts, but for those efforts to be successful, information sharing must be effective among U.S. agencies. The report noted that a whole-of-government approach would increase law enforcement effectiveness overall. The United States has entered into several agreements and organizations such as the Financial Action Task Force, or FATF, and the International Organization of Securities Commissions, or IOSCO, to improve information sharing. The report recommends more of the same cooperation and information sharing to combat AML-CFT crimes. It highlights the need for greater regulation in this area to prevent criminals from taking advantage of jurisdictional arbitrage. There are many U.S. agencies that have international training and outreach efforts to help fight crime. So take that as you may. I mean, they have been on this for a while trying to help stop digital crime. You know, again, like this article stated, it's hard to do that when there's so many different guidelines, regulations, things are happening within multiple countries. So where does the jurisdiction fall? Up next here, New York State releases guidance for issuing dollar-backed stablecoins. The New York State Department of Financial Services on Wednesday released guidance for U.S. dollar-backed stablecoins issued by entities it regulates. According to the department, the move makes it the first regulator in the United States to impose such expectations on a stablecoin issuer. The guidance lays out requirements regarding redeemability, reserves, and attestation for stablecoins. According to the guidance, a stablecoin must be fully backed by reserves at the end of every business day, and the issuer must have an approved redemption policy in writing from the DFS that allows the holder to redeem the stablecoin for U.S. dollars. In addition, the issuer's reserves must be segregated from its proprietary assets and consist of U.S. Treasury instruments or deposits at the state or federally chartered institutions. The reserve must be examined monthly by a certified public accountant. This guidance applies only to issuers regulated by the DFS and limited purpose trust charter holders operating in the state. These issuers include the Paxos Trust Company, issuer of the Pax Dollar or USDP, and Binance USD, BUSD, Gemini Trust Company, the issuer of the Gemini Dollar GUSD, and Gmo-Z.com Trust Company, the issuer of the Zytara Dollar ZUSD. The guidance does not apply to other stablecoins that may be listed by DFS regulated entities. New York State's BIT license, which is issued by the Department of Financial Services or DFS, has been criticized by New York City Mayor Eric Adams for being notoriously difficult to obtain. Some crypto firms have chosen to relocate out of the state since BIT license was introduced in 2015. The DFS is aiming to triple the size of the virtual currency team this year in an effort to address delays in regulatory processes and ensure operational excellence across its virtual currency unit. So let me know what you guys think. How do you guys think this is going to affect the US dollar? Not the US dollar necessarily, but stablecoins as a whole. I know New York is doing a lot of crackdown on regulation. So if you are located in New York, I'd be interested to know how you feel like these regulations are affecting you or will affect you in the future. Up next here, traders target a $1,400 Ethereum price after ETH drops closer to a critical support level. On June 8th, the Ethereum network successfully completed its merge to become proof of stake on its Ropsten testnet. However, the news had little impact on ETH price. As the Ropsten upgrade starts to look more like a buy the rumor, sell the news type of event, most analysts are keeping a short-term bearish outlook for Ether price. And you can take a look at the chart here. Here's the ETH USDT one-day chart. Twitter analyst Cactus has observed a bearish head and shoulders pattern in Ether price data and has questioned whether the price will continue to fall sharply as is typical after the completion of such a pattern. Cactus said that it is difficult to be bullish on any time frame until support and resistance flip at $2,000. The following chart, posted by crypto analyst and pseudonymous Twitter user Il Capo of Crypto, highlights the areas of support to watch below $1,800. And there is that line there. Il Capo of Crypto noted that lower highs all the time and that support has been touched a lot of times already, which could mean trouble for the market. The analyst said that if the price cleanly breaks below $1,700, it would confirm that the last leg of the decline is underway, with the main target being $1,000. Do you guys think that we're going to hit that? A bearish descending triangle chart pattern was identified by Crypto Tony, who wondered if it is something too obvious to ignore. According to the chart provided by Crypto Tony, a breakdown below the current price could see Ether pull back to the $1,450 to $1,600 range. And here's that chart here. A cryptocurrency trader by the name of Cantor and Clark offered a more macro view of the general weakness being displayed by Ether. He stated that if it weren't for the slight difference in this market period, he would look at the ETH chart and think that big ships turn slowly and they don't stop easily. Clark said that this could be the beginning of actual momentum down according to high time frame measures. Where do you guys think price for ETH is going to head? Do you guys, I'm curious to know predictions. $1,000 here that they're thinking is the lowest that I've heard, but there's a lot of analysts out there. Up next here, DataDAO Delphia raises $60 million Series A led by Multicoin Capital. Delphia, a startup that provides algorithmic advice, has closed a $60 million investment round backed by some of the biggest venture funds in the cryptocurrency industry. The company plans to use the funds to create a new decentralized autonomous organization, or DAO, focused on data. The Series A was led by crypto-focused venture firm Multicoin Capital, with additional participation from Ribbit Capital, FTX Ventures, Valor Equity Partners, FJ Labs, Lattice Ventures, and Cumberland. With this funding, Delphia plans to launch a new rewards token and expand the ways users can contribute data to algorithmic models, all with the aim of enhancing investor returns. According to Tushar Jain of Multicoin Capital, data DAOs use data owned by users to benefit all contributors within the organization. Delphia, as an algo advisor, will use data contributed by users to enhance its algorithms for trading money. While data contributors are rarely rewarded for their efforts, this solution provides them with direct economic upside and the ability to govern the data they help create. This solves the misalignment between those who contribute and those who reap the benefits, which has been a major issue in the past. Jane explains that data DAOs offer a much needed solution to this problem. Delphia allows users to invest in long-only actively managed strategies with a minimum of $10. This gives users exposure to a diverse portfolio of individual stocks. DAOs provide users with access to decentralized communities that are not managed in a hierarchical way. This type of organizational structure has caught the attention of national governments that are looking to promote the formation and development of crypto projects within their borders. Those who support DAOs believe that they incentivize the long-term sustainability of cryptocurrency projects by giving users a direct stake in their growth. So let me know what you guys think. They have a video here on Cointelegraph, what is a DAO? So you can learn a little bit more about it if you are not familiar with them. Let me know if what you guys think, what your points of view are on this. And last but not least here, Optimism loses 20 million tokens after L1 and L2 confusion exploited. The so-called honeymoon period for the Optimism Layer 2 scaling solution has been cut short by an exploit in the smart contract of one of its market makers, leading to the loss of 20 million OP tokens. The exploit occurred on May 26, but it was only recently reported to the community. 1 million tokens, valued at around $1.3 million, were sold on June 5th. An additional 1 million tokens valued at around $730,000 were transferred to Vitalik Buterin's Ethereum address on Optimism earlier today at 12:26 a.m. UTC. The remaining tokens are dormant for now, but could be sold at any time or used to influence governance decisions. Optimism PBC, they tweeted out in regards to this. You can view more in depth on their Twitter. The airdrop of OP tokens to network users on June 1st was a way of distributing the native token for the Optimism Layer 2 solution. L2 solutions help to take some of the pressure off of congested Layer 1 blockchains like Ethereum. On Thursday, the Optimism team provided a detailed summary of how the 20 million OP tokens were intended to be used by the Wintermute crypto market making firm. After sending 2 test transactions, the team sent the full amount of tokens. However, Wintermute discovered that it could not access the tokens because the smart contract it used to accept the tokens was still on L1 and had not been updated to be deployed on Optimism. This technical oversight opened the contract to an attack in which a bad actor took control of the contract on the L2 themselves. When Wintermute became aware of the problem, it immediately began a recovery operation with the goal of deploying the L1 multi-sig contract to the same address on L2. However, its attempt to remedy the situation was unfortunately too late. An attacker was able to deploy a copy of the multi-sig contract to L2 with different initialization parameters before the recovery operation was completed, thereby taking control of the 20 million OP tokens. In a June 9th message to the Optimism community, Wintermute took full responsibility for the exploit. The firm stated that it would perform OP buybacks equal to the amount the exploiter sells as a means of making best efforts to smoothen the effects of price volatility. Wintermute has offered to accept the incident as a white hat exploit if the hacker agreed to return 19 million tokens within 1 week. This offer was made before the hacker transferred another million tokens. Most replies to Wintermute's message applauded the firm for its transparency in revealing the issue and for accepting blame for what happened. In the short term, the Optimism team has granted Wintermute an additional 20 million OP grant to continue their work. However, the team also pointed out that such market-making efforts are temporary and the community should not expect or rely on the Optimism Foundation to support them in the future. Chris Black here has a tweet out. He is the host of the Proof of Decentralization podcast, said that the team had considered regaining control of the stolen funds by performing a network upgrade. However, he views Optimism as dangerously centralized due to the fact that most DeFi projects rely on admin keys. Black suggested that the most obvious explanation for the attack is that someone involved with Wintermute is responsible. He asked why everyone in this space is opposed to considering this possibility. An insider job, that's what a lot of the time things happen. I'm not saying that this is in this case. There is no evidence to support this theory at this stage. The update has been met with negative reaction from investors as the token price has decreased by 31.2% over the past 24 hours, according to CoinGecko. So it's unfortunate. If any one of you are affected by that, my condolences to you. It's sad that these kind of things are happening all the time. Make sure to stay up to date on crypto news. Here is a great channel to do that. Make sure you know what's going on in the space so you can make investments and decisions accordingly. However, this is not any financial advice ever. We're just giving our own opinion, putting the facts out there from what we have. Thank you guys all for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.